While the RBI is expected to cut rates this time around, Uday Kotak of Kotak Mahindra Bank says that the markets have already factored in a 25 basis point cut. Speaking to Shireen Bhan, he also stressed on the need for banks to transmit these rate cuts and what the government's next top focus should be.
If you look at the Indian economy, it's on two legs, consumption and investment. Consumption has slowed down recently, but for the first few years of this previous government was in good shape. Investment is where the challenge is. And within investment, the government has invested pretty actively over the last 5 years. It is private investment. And in order to get private investment back, we need entrepreneurs to feel like putting money to work.
Okay. What will get them to feel like putting money to work?
I think...
I mean, is there demand for them to be able to set up additional capacity, fresh capacity?
I think it's chicken or egg. This is probably a very good time to really put up capacity with a 5-year view.
Okay.
I would go for smart capacity addition. I would like to see, obviously, interest rates need to correct downwards. I would like to see liquidity continue to get better. And we need to also make things easier.
Okay.
If you look at the entire situation, there's a lot of preemption of high rates of interest paid on savings. For example, small savings rates by the government. They're much higher than the deposit rates of banks. Therefore, if banks have to get deposits, there has to be some parity in how the interest rate cycle works. Similarly, tax exemptions on debt instruments should be corrected. And finally, equity investors must feel that it is better to invest in equities. Today, there are 4 taxes on equities. Number 1 is corporate tax. Number 2 is dividend distribution tax. Number 3 is tax on dividends, about 10 lakhs. And number 4 is capital gains tax, which has come back. So we need to encourage equity investment to get the animal spirits back.
Of the 4 that you mentioned, and I'll pick up each of these points, but on the equity part, of the 4 taxes that you mentioned, capital gains was brought back. Do you believe that there is a case today and for a rollback, and do you expect that?
I think if we want animal spirits back, people should be ready to invest equity into new projects. There is a challenge for equity savings in this country as the traditional promoter class has got into hibernation. We need to get equity and risk capital and risk appetite back. And whatever we need to do, it must, number 1, make equity more attractive compared to debt. And number 2, entrepreneurs must feel like putting money to work.
Well, I'll start by asking you, Mr. Kotak, expectation of a 25 basis point cut from this policy, but what's also the rate outlook for the year? And do you expect a change in stance as well?
See, number 1, I think 25 basis rate cut is reasonably baked in by markets, but it has to be combined with transmission. And for banks to transmit, they need their cost of deposits to come down. For the cost of deposits to come down, alternative instruments should be at reasonable parity. And this is where the issue is. Small savings even now pay over 8%. And a 20% of delta mobilization of fiscal deficit is coming from small savings at much higher rates than government securities rates. So bring parity back and make sure that transmission of rates happens